The housing market is crashing. The warning signs are everywhere. Foreclosures are ticking up, bankruptcies slowly increasing, subprime auto about to go critical, add in credit card debt, government overspending causing property taxes to rise, and banksters going nuts. Then you have the formula for nice, sweet 30% correction at a minimum in prices in the hot markets, in some cases 50%. Nationwide, housing peaked in late 2017. Prices have been falling ever since. The bubble has popped, folks. Harry Dent is back predicting property prices will fall 50%. Harry is absolutely right. Double bubble real estate is one of the top 10 biggest ripoffs in the world today. Stay away from bubble real estate at all costs. All a house is some drywall and 2x4s, and a lot of headaches. What a laugh. But warning the real estate players they are in a bubble is like telling smokers that smoking causes lung cancer. 90% of lung cancer deaths are in smokers. Smoking will kill you is printed right on every pack. And yet they don't listen. The smokers just keep right on smoking because they are so very addicted to it. They like that nicotine buzz just like the replayers are addicted to that easy free money for doing nothing. Greed has blinded participants in this and most other markets for about the last 5 years. With the reduction in capital expenditures, refrigerator boxes are in high demand. Prices fell 40% plus during the last minor correction, and the Fed couldn't prevent it. Down we go. For those privileged to be in possession of capital, might we remind you that once you exit mortality, you give up control of the capital. And if you believe trust funds will somehow preserve it within your family, you're poor history students. You're trustees of capital, and your task is to effect as much good as you're capable, while it's in your possession. The good you do with your trusteeship is your metaphysical investment in your progeny, not trust funds that wither their drive and initiative. Does that mean to leave them nothing? Certainly not. Follow the Warren Buffett strategy of giving them enough to excel, but not so much, they become a hedonist. You'll be taken to account for your trusteeship. You can bet on that. And by the way, no matter your intelligence or abilities, wealth is enabled only by God, according to His wisdom and purpose, not by the power of man. You don't have to believe that though, but remember, mortality eventually comes to an end. Therefore, strategize like Descartes, who not certain of God's existence, imbibed prudence, and hedged on God's presence, just in case. I hope the hedge fund folks are listening. There will be weirdness in the prices. Underwaterfront properties will fall the fastest, but inland properties of similar price bracket will rise, as those that sell out from underwaterfront buy them. Sea level rise. Safety will also become of rising importance, as higher unemployment will see many more desperate people on the streets. Probably a shift to regional centers away from the big cities, as of course unemployment shifts to those big cities drastic for a future. Some cities will just go bad and with the property prices. If the prevailing winds of the market forces, or manipulations, aren't enough, the smart meter situation isn't a good one. It doesn't help that most people are zombies when it comes to doing their homework on the topic. Add in 5G, cell towers and wireless routers and you have a recipe for disaster in all situations where there are a confluence of condos. These are the radiation ghettos of tomorrow, actually, of today. How the developer beats out their own investors. Early in the boom cycle, high-rise can generate 100% profit margins, turning land into high-rise apartments. That 100% markup leaves a lot of space to cut prices. So the developer produces and sells as many apartments at 100% markup and then reduces prices slowly. Of course the developer's customers do not have that option. They paid full price and now the developer is undercutting them and still building more apartments and no tenants. So the developer keeps putting apartments on the market starting at 100% markup and dropping slowly but surely all the way down to 10% markup. Those people who bought the apartments are stuck unwilling to sell until it is too late and property prices collapse. The developers in their infinite greed, blow all the money they have made by continuing to develop apartments as prices collapse entirely and a lot of people go bankrupt. Watch developers, they are greedy as and will always happily wipe out their own customers. Quality of life demands are going to do weird things to the property. Wealthy people can buy anywhere in the world. They will be pursuing safest and healthiest environment to live in and then ruthlessly exploit their investment markets from a safe distance. Plenty of unsafe places in the world and very few safe places, especially over the medium term. Best to bail and relocate early become it gets harder and more expensive, much harder and much more expensive. There are two main themes in finance in this era. Continuous increases in the money stock of all Western nations to pay for politically desirable causes and to support business survival through loans. The basic consequence has been massive malinvestment in entities with no sound economic basis and enormous expansion of the social safety net through expenditure on all manner of educational and job creation schemes. Anything but giving money to people directly for living expenses. That is frowned upon and denied by appeals to austerity. Of course, many of these schemes have a barb in the tail. If you borrow subsidized funds for education, the assumption that you will get a job that will let you pay the money back is a moot point. Still, in the meantime, individuals are not on the streets, and companies can maintain a certain pretense of health. This is the essence of social welfare as done by political conservatives. The result is continued support for an increasingly unreal economy whose assets have no function other than to maintain an image of productivity and prosperity. This applies to human assets too. Well-paid government drones filing millions of pages of compliance forms for a myriad of regulations, or smart engineers building a bigger and better windmill for electricity generation. It is all leading to the same destination. The question that has to be raised is simply what assets, paper or real, will have value when this is all over? Stocks are representing ownership in companies now bankrupt. Bonds of government which has passed into history? The real estate covered with buildings that no longer serve the purpose for which they were built and may have no purpose in the new world? Just what assets will still have value in a collapse of the current system? Suppose the banks are closed and broke? No money for loans. Exchanges closed. No public transactions for stocks or bonds. Private wealth in hiding. No private placements. Real assets like gold may be confiscated by newly formed governments needing finance while seeking to put the past to rest and in a truly humorless mood. The above may be taken as an extreme, but the question still remains. What will be an asset on the other side of this crisis? The behavior of the central banks is effectively meant to break the economies of the Western world. The politics of the Western governments are destructive, full of fantasies that destroy the social fabric and call for the destruction of 2 centuries of industrial development. This is not the kind of situation in which you can plan to pick up a few million of distressed real estate with the help of a friendly banker. The bank may not exist, the banker may not be familiar, the property may cost zero, but there will be no safe way to acquire and protect the title. The point is this: the end game is not just an economic crisis but a political crisis as well. The legitimacy of states will be in question. The status of the law will be in question. The authority of institutions will be in question. Certainly, the quality of money will be in question. But let us suppose that organized society does survive without excessive collapse, but only that the oligarchs have acquired the final title to the casino. Will they ever lend you money or sell your property, which will let you make any money? Even today, the Fed can force recession and has organized recessions in the past, which destroy investment programs, bankrupt businesses, and make available cheap assets to buy by those in the know. Governments can destroy profitable businesses with new regulations and the stroke of a pen. Landlords might double the rent on your most profitable store location. Imagine what happens when this is all connected together. What do you think the future will bring when the government, the big banks, and all other centers of wealth and power are under the same management? They know your plans to the penny and can frustrate or reward at will for their own purposes? Going to a banker for a loan will be more like going to a padrone for a bit of patronage. The padrone will know who will be allowed to win or be forced to lose. We are approaching the next great change in society. It may be nothing in the end like what I have described, but it may. The drive for power and control of all aspects of life are there. This drive may fail, of course, but it does seem now to be the way to bet. I don't think this kind of situation is what most people think of when they think of investing, but it is certainly something to consider while making plans. Neither the housing market nor the stock market will crash until the exorbitant privilege of the bankers and the ruling classes to print money and manipulate prices is taken away. there is not a single actor out there even potentially capable of doing this even if he wanted to. The Western domestic populations are obedient serfs who are only interested in not toppling the apple cart. The Russians, the Chinese, and the Indians are beholden to the same money powers that rule the West. The same mindset rules everywhere. It's Hotel California wherever you go. Americans don't use a lot of savings to buy homes. Even with these abnormally low rates, first-time home buyers can't get into these homes because many do not qualify for a mortgage because of a bad job or credit score. The days of ninja loans are over, for now. Even if these prices decrease, they're not going to be able to get into those homes. Look at what Auto is doing now, they're reverting to subprime lending to get their massive stock of cars sitting on their lots out. In America, the government, coupled with a slew of builder and realtor associations, control the housing narrative. The entire shithouse is about to blow up and collapse at free fall speed. It is only a matter of time before the next housing crash happens, and it looks like it could be a really, really bad one.